Hi, thanks for joining me again. I thought this week we might look at testing for strength and weakness. Whenever a market moves away from an important level on a chart, about 50% of the time it will come back and retest that level for strength or weakness. Some traders use this as a good indication of where they can go long and short in a market. You can see on this chart in front of us, it's a daily chart, and this bar here is clearly showing it's broken out above this level of consolidation of some form, and it's gone up for 2 days. It's a daily chart, and then price has come back and returned to the breakout line, and effectively it's testing it for strength, and you want to see the market support the stock when it challenges the breakout line. You can see in this case strong support came in here on this increase in volume down here. Then there was a test and prices moved higher again, but it has closed off its low, so there is still supply in this market. You can see this next bar has closed well off its high, so there is still supply in this market. And once again on the next bar, this bar here is showing the market making a serious attempt to support the market. The spread's very narrow. Although the close is low, it is level with the previous bar's low, and volume increased. The next bar was up, but there is still supply in this market. A lot of traders will use this testing for strength as a measure of the strength within the market, and then they'll look to go long or short when price moves back above the initial breakout or breakdown. So in this case, the market is showing that it's attempting to support the market and that the breakout is strong, and some traders would look to go long in this stock if price is able to then push above the initial breakout bar here. Another example is the ASX 200. You can see this period here of clear accumulation. This is the breakout level just here. Here's the breakout. It's not as clear as the previous breakout, mainly because it's an index, so it's a composite of the 200 largest stocks on the Australian Stock Exchange, and you don't quite get such clear indications at times. But you've got to break out above this accumulation zone, or reaccumulation zone more likely. Price has come back, tested the level for strength, and then price has moved away. Now, if you mark the high of the next bar, you can see there's a secondary breakout. This is where traders would have gone long if they'd used this as an indication of strength in the market. And then there's been a secondary test, and it's come back and it's tested the new breakout, if you like. And then price has moved higher in response. This was a good example here of the market pushing above the breakout line, coming back and testing it for strength. And then this big tall bar standing up tall and straight with a positive close up near its high is traders moving into the market and buying the breakout. Price came back and tested for strength, and then spent 8 continual days moving higher. And this is the Australian dollar currency futures. Now you can see on this one, here's the W shape. Hope you know what that means. W shape generally forms some part of a accumulation. And an M shape, the inverse, often forms some form of distribution. Anyway, here's the highs of the breakout. Here's the breakout bar. Price has clearly moved up and broken out here. Then it's come back and it's tested the breakout for strength. And then price has pushed away. You'll see if you mark the highs, here's where price has pushed away. Here's the breakout bar. There's the breakout, and then price has come back and tested the secondary level for strength. And we mark that. And here's the new breakout, and then price has come back and tested this level for strength. And we mark that. Price has broken out, but this time price is too strong to come back all the way and test a fresh breakout for strength. This time price has just accelerated higher. Now, not all the time does the market come back and test for strength, only about 50% of the time. You can see here, this stock is clearly broken out here, whether you mark this level as the breakout line or this level as the breakout line, or even this level as the breakout line. It doesn't matter, it's clearly broken out above all of these levels, but it's been way too strong to come all the way back and test for strength. It's come back somewhat, but there's still quite a gap where price didn't come all the way back and test for strength. It was far too strong for that. Instead, it's come back a little bit, and I'll often say that if you look at a complete breakout as a whole, so here to here, the higher in the breakout price consolidates, the stronger the market is. You can see that price only came back perhaps a quarter or a third the full length of the breakout from top to bottom, and this market is likely very strong. And you can see here that price is more than likely forming some type of bullish absorption. Here's a threatening down bar, and here you've had a positive response here. You've got some clustering of closes all together. So we'll just have to see if there's an up bar in response here, but it's looking quite positive, and so far this is looking like a period of bullish absorption. Now you also get the same thing in reverse. It doesn't have to be a test for strength. It can be a test for weakness, in which case you'd be looking to go short. And here you've got a level. Here's a clear breakdown bar, and here's the breakdown. Price over a period of time comes back. Here's the breakdown line. It tests the breakdown. Weakness is confirmed. This is where you'd go short, probably as price broke below that bar's low, because that was the bar that came up and tested it. And in Wyckoff terms, this would be an upthrust of the breakdown line. And then as price rejects the breakdown line, proves that it's weak and it's unable to recover, you can then ride the short lower. Okay, just a quick video today. Hopefully you understood that. Leave me a comment if there's any questions. Thanks for your time. See ya.